remercie tous ceux qui ont pris le temps de la journée pour venir et atteindre ce workshop. Donc, je m'appelle Joyce Capseux, je suis chargée de projet pour DDI Alberta.
J'aimerais remercier tous ceux qui sont là aujourd'hui. J'aimerais remercier Lorraine d'avoir accepté de faire cette présentation pour la communauté. On espère qu'on va apprendre beaucoup parce que l'importance de l'assurance vie est capitale pour nos communautés, pour ceux qui vivent au Canada et même au-delà. J'aimerais surtout remercier le gouvernement du Canada qui finance ce programme à travers le projet Nouveaux Horizons pour les seniors. Donc, je vais lire le Land Acknowledgement vu que je suis à Black Force en ce moment. The town of Black Force acknowledges that we are on Treaty 6 territory, a traditional meeting ground, gathering place, and traveling route to the Cree, Saulteaux, Blackfoot, Métis, Diné et Nakota Sioux.
So, maintenant, je vais introduire notre guest speaker. Elle s'appelle Laurence Wibina, and she's from la République démocratique du Congo. She's married and has 2 children. Elle a un diplôme en journaliste radio-télé et une licence en édition multimédia. She came to Canada 9 years ago and she works as a counselor et elle a établi 2 organisations francophones. Elle est une entrepreneuse et une conseillère en finance. Donc, je vais passer la parole à Madame Lorraine.
Merci beaucoup, Joy. Merci, Hervé. Je suis très heureuse d'être avec vous cet après-midi. C'est vraiment un plaisir d'être là parce que nous savons que c'est important d'apprendre sur les finances. I'm really happy to be here to share with you. I'm married. I have 2 kids. I think I did more than what I said, but just to keep it short, you know, coming in Canada was kind of a dream. I think I'm just assuming we might be all immigrant right here. And when we were coming in this country, we just had a lot of dreams because we know it's a developed country. It's Canada, like it's one of the best country in the world. So we have our dreams and all kind of stuff. But when we come here, the reality hits different. You know, we have some challenges and we're gonna talk about one of them today. Let me just share my screen for a minute so I can follow. So you can see my name here. You can see my phone number as well as my email address and the financial broker and we have a lot of challenges, as I was saying earlier here, when we come from other country, you know, looking for a better future. We, you know, for ourselves, for our kids, we have dreams because back home is kind of this and kind of that. And here in Canada, we say it might be better. Unfortunately, it's like you have to start all over again. Joy just mentioned it. Back home, I was a journalist. I'm not a journalist here anymore. I used to work at All Email. I used to work as a clerk. I used to do deliveries. I used to do, you know, those kind of little jobs just to try to fill up those gaps and be able to sustain, like to live and to bring the bread on the table, right? In order to you to do that, you have to like combine 2 jobs because it's never enough. It's not enough to cover everything you need. And when you work 3 jobs, you don't have quality time. You don't have, it's gonna even affect your health kind of because you're tired, because you're exhausted, because you don't have time to rest and reset. You just kind of running. And you know, those kind of things kind of affect even our health. And then despite the way you work so hard, you don't even see the result of it at the end of the day. You know, if something happened to you, they make, oh my God, it was a hard work. You're like, what can we do? And when they go search to your bank account, maybe, guess what? It's gonna be nothing there. And we need we need to do something about this. So we have to get off this kind of routine, kind of vicious circle in our everyday living. So we have to learn, first of all, and thank you for Hervé and Joy, who just, organized this session, which is really, really important to us to learn how we can manage it, how we can get out of this. It might be maybe global today, but I know some of us, we have a specific need based on our financial story. And I'm going to talk to you a bit, about this challenging, because I know when we see those things, we can, our brain can recall. Okay, so 51% of Canadians don't have any savings. We have a hard time to save because we're living paycheck to paycheck. I just mentioned it. You get paid like you were paid maybe yesterday because it was Friday. And then, until we arrive Monday, you don't have anything left because everything is gone. And you have to wait another 2 weeks in order for you to get another paycheck. Is that sound about to someone here? I think we are used to that. It's our daily basis living, right? And then we also we experience debt. Like an average adult in Canada has at least 21,000 of debt. And I'm talking about just consumer debt. So credit card, line of credit, those little debts that we have. But if we add on top of that a student loan, a car loan, it might be 21,000 it might be conservative, right? And also we just noticed 45 of Canadians here don't have the protection. And this is the one that concerns us today, the protection part. 45 Canadians don't have any individual life insurance. You might talk to them and say, hey, how come you don't have any life insurance, but you're driving your car? How much you pay? They say, yeah, well, I pay $200 per month for my car insurance. And they're having hard time to pay $100 per month for life insurance. And he's gonna say, yeah, of course, I cannot drive my car without any insurance. That's a valid point. But you know what? You can also live without any life insurance, because if something happened to you and you have nothing in your savings here, then you're gonna be in trouble, okay? And when we sit with our, when we help people, you have to know that it is important for you to be protected anyhow. Because in this area here, let's say you might, you work so hard, you might have like 200, okay? $200,000 savings, you work so hard. But an average of a Canadian, like at the age of 50, can be diagnosed with a critical illness. A critical illness might be like heart attack, it might be a cancer, any kind, like we have a million kinds of cancer right now running. We have actually 25 kind of critical illnesses. Let's say you're diagnosed with this disease and you don't have any protection. You're gonna recall to do your savings because you have to pay bills, right? Medication, treatment, and at the end of the day, when you reach the age of retirement, which is 60 plus, then you're gonna have nothing left here because everything went to this to pay the bills. But let's say in the same scenario, okay, you are protected. Any kind of protection. You're protected for disability, for critical illness, for life insurance. We have tons of kind of life insurance, and it's tailored. I cannot talk about different kind of life. It's gonna take us hours, days, because we have a lot. Okay, and that's why we go by approaching individually, like people individually so that they can learn based on their income, based on their challenge, based on their goals as well. But let's say you are protected, you have any kind of life insurance. If something happened to you, an insurance might be covering those bills, okay? If it comes, if you become sick somehow. So when you are here working hard to get there, which is retirement, nothing's gonna block you because your protection plan will take care of everything. So it is really, really important for us to have this knowledge. And we might say, okay, and the average of people who don't have life insurance is not because they can't afford it. It's not because they don't have any money. It's just because nobody sits with them. Nobody actually sit with them to talk to them about this financial, this asset. When we mention life insurance, usually in our community, people recall to death. They're like, oh my God, no, don't talk to me about that. It's like you buying a coffin for me. You just want to bury me alive. No, we have different kind of life insurance. And when we sit with our people, I don't focus on this first of all. I'm gonna go from the bottom up approach. I'm gonna make sure first you are covered. I'm gonna make sure first, like you are covered, your kids are covered, your house is covered. Then we can help you get out of the debt, because debt is not your friend. If we find out that people are in debt, we're gonna make sure that they get rid of that or how to manage debt. And then you can actually start saving. Hopefully it makes sense for us. These are kind of where we work on people, okay? When we advise them about money, when we advise them about life insurance, when we advise them about savings, because life insurance is not about death. I mentioned we talk to people about houses, how to buy house, not just to buy house, but in the lowest interest rate possible. I say that I'm a broker, so I don't just go to one place. We're gonna shop around for people and find the best rate interest possible. We have people for the RESP, like savings for kids. That's a free money that we receive from government. Thank God for Canada, people getting paid, because you have kids. And usually we just spend that money because it's, yeah, that's a free money. It's a free money, but you can manage it so that when they are not little anymore, they won't go under debt as well. Like just kind of breaking this debt circle that we're having, passing on out, through other generations. So this is a free money. But we have other options. We have also investment, like kids' wealth, investment for kids, so that when they grow up, they find something for them. And also we have those kind of savings, RRSP, that which you can contribute or through the job or by yourself. We have those non-registered fund, they are just investment, and the TFSA. It's a tax-free savings account. And also we have life insurance. The insurance, it's a protection, it's a lower cost, it's a tax shelter. So life insurance is not just about people dying. Actually, people get life insurance because they wanna save more money. They wanna open a new business. They wanna invest in something, it's not just when you see life insurance, don't see the cemetery right away, okay? See a protection. And we also have some living benefits. So you don't have to die in order for you to receive the benefit for life insurance. Even when you're living, you can still get advantage of that. Hopefully that makes sense as well. So I'm gonna just, I put up these slides here to see how the life insurance is really important. These people are real, and this case is real as well. You know, before those people, like before we sit with them and advise them how to manage the money, the financial, this is their situation. They were paying $100,000 for the mortgage, and they have a line of credit, they have a credit card. These are like the total of, this is the total of the debts they were having. But look at this. They were paying different bills for each, you know, debts they were having: mortgage, line of credit, and credit card. And these are the interests. Look at the interest: 3.75, 6%, 19% of rate, interest rate for each debt. But look at now, when we shop with, like, we shop around for them, they say, you need to change a plan. The mortgage is still the same, but we got for them a life insurance. Here, if you pay attention, this one here is the mortgage insurance. That's why it's the same amount as the mortgage debt, because this is the mortgage insurance. The mortgage insurance is, you know, it's not for you. You don't benefit for that. If something happened to you and you have a mortgage insurance, the bank will just come take everything, because there is nothing left for you. But look at the life insurance, $700,000, which is covering like twice the mortgage. Sorry. And look at the interest. So if you combine those rates here, it's really higher. But just for the life insurance on its own, they were able to even open a TFSA, which they didn't have before. Still contribute, but still have enough money left, because see here, $2,747 a year is like $2,075. You see, but they have had up, like they were able to contribute to, you know, extra money to have another shelter in the TFSA because they got life insurance. They were able to save a little bit. And look at this. This is now the retirement plan, because, you know, the purpose also is to think about the retirement for the people at just 50 and plus, right? Look at here. They were saving their RSP for Robert and Mary in a bank, any bank here in Canada. And 5%, I'm telling you, is just being generous, because when you go to the bank, like open an RSP account or any kind of savings, it's like 3% maximum. So if I put 5%, it's just me being generous. But look at this. With the RSP, okay, these are the monthly contribution until they get 65. Until Robert reaches 65, it's gonna just have this amount in his account. Okay, they are saving $400 monthly. But when we sit with them, we say, hey, we can help you invest well, place your finances in a good place, in a good shelter. All right. And they were able to invest with 8%, which is also a minimum. It's a minimum, because you might find some other institution investing for 10%, you know, but I just took the 8%, which is the minimum, with the same RRSP, contributing $200 per month. Look at now, at age of 60 and 65, Mary will get $1 million, and Robert $2 million, literally. You know, it's just that's actually the beauty of sitting with someone, of having the knowledge how to manage your financial. Like it's about learning, because being ignorant, it's something that it will kill you. Ignorance, it's not good. I remember when I was sitting with a financial, before I become myself, I was looking at my policy, my life insurance policy. I was like, Lorraine, what have you done? Because I signed everything. I even didn't know. I was just putting my name, my signature, and my everything, but that was just nothing. You know, my kids couldn't receive anything important for them, like nothing at all. But because I learned, because I sat down, listening, comparing, I'm like, my goodness, I need to get out of this routine. I need to get out of this vicious circle. And as an immigrant, I think it's really, really important for that to, start talk about those issues. And also, I know sometimes when it comes to have to leave this legacy, okay? Because we are parent here, we have seniors here maybe, and they say, okay, what is going to happen? Okay, I have my life insurance in place. I have 4 kids. I have 3 kids. How do I make sure that my kids we still have? Okay, I have a question. How old was Mary? And when they started saving to accumulate such, during the, okay, so the age really that, like for Mary and in the Roberts, it depends when they want to retire, because when I sit with you, Nancy, it's different. You have a different scenario. I don't know how old you're now, but when I sit with you and you say, you know what, Lorraine, I just want to retire at 50, or I just want to work until I get, 70. Right. So, and those gaps, like you have more time and you have more accumulation based on when you want to retire. And of course, if you start it really late, you might just compensate how much you put on. So if it's late for you, you might be, okay, I need to save more in order to receive also more. But in like each way, you got to have something. Okay. It's not just people gonna have to raise some GoFundMe in order to bury you. They're gonna go just, knocking doors and say, hey, we have somebody here that he's in a problem, blah, blah, blah. No, at least we can have something left out of you. So like the age of retirement is just based on the individual plan, okay? Because now Mary, she's around 40-ish, and she's gonna retire and at 60. So she kind of have like 20 years ahead to save. All right. The financial thing is like individually. We have a different kind of financial issue here. So I cannot go case by case. This is my phone number. You can, text me, leave me a message, say, hey, I want to sit and talk to you. Just, go through everything and we can help you through, right? And for the people who have also, have life insurance and they have beneficiaries, because when we set up a life insurance, you need to have a beneficiary. Like it might be kids. If you don't have kids, it might be somebody close, even a friend, even an institution, right? That can be your beneficiary. But the thing is, maybe it might be too big. When we take example for the younger generation, like 20-ish around, they might go crazy about that. And that's the importance to teach them right now how it is important to have a counselor, a financial advisor. People just, I'm talking about maybe my culture, African, when it comes to money, we become sneaky. We go like, oh my God, I'm gonna hide. I don't want them to know that I have this money. I don't want to see that we have this kind of money. No, it's not the case here. We are open because your money is yours. Nobody's gonna steal it. Talk to someone. Put something in place. And even in your will, You have the power of attorney, like someone who can actually manage it if you're not there anymore. That person can lead them how to invest, how to pay some debt, what you really need right now, and what is going to need few years after. And then also leave a legacy behind him as well, because the purpose is not for you to work for money, but make the money works for you. If you get up in the morning every day, you say, hey, I gotta go, I gotta run, I'm gonna purchase money, I need money, you're gonna work until you drop, because you don't have any plan. I know we live in Canada, and some of us experience people, at Walmart's gate saying, welcome to Walmart. Thank you for shopping at Walmart. They are seniors, they are old. Do you think they're happy to be there? At this cold winter, waking up every morning, driving to Walmart just greeting, like for them to greet people? No, maybe they didn't put anything in place. Maybe they didn't plan ahead their retirement. Maybe there is a lot of maybe. So to avoid this kind of situation, if you have kids right now, make them learn. We have those kind of platform right now with DDI, Hervé and Joy. They have working with other people. You need to make them learn how to manage it, and to have somebody who can just actually work with them and push them forward and advise them wisely where to put, where to invest, how to invest, what to avoid, in order for them to leave a legacy, and also how to save for their kids, because they're gonna get married and have kids. It's a line, right? We're having this situation and this kind of conversation here because in our culture, we are not used to leave a kind of legacy. We don't inform others. We don't talk about the future generation. It's not a taboo anymore. Finances is really important. And if you don't manage it, if you don't act wisely, then, it's going to be destroying you. Hopefully it makes sense. This is my phone number, and let me also put my email address. Okay, Hervé.
Yes, I'm going to ask a question, Lauren. So in regards to seniors, because we know that for them it might be very expensive to have a product like that. So what are your recommendations? And the second question will be about the transfer to the next generation. So how can we make sure that those people receiving the benefits of their grand or parents will be managing that in order to pass it on to the next generation as well? So those two questions.
Okay, so usually when a person is, like 50 plus, when if it doesn't have any life insurance yet, it might go through, because they know, at this age we have, a lot of sickness or whatever. You may be healthy also, who knows, right? But you're gonna go through those like exams, and it might cost a little bit more. But at the end of the day, it's still worth it. It's still worth it. And you cannot just have life insurance like after you die. It might be an investment that you can still pass on in every kind of policy that we put in place. There is always a beneficiary, and we will always show you the amount of money you put, the rate that we're putting on this money, and after this many years, how is it going to produce. Everything is clear. We might come with 2, 3, 4 proposition in front of you telling you, look at this. If you put this amount of money, that you're going to get here. And as I say, it's we have different kind of situations. I can have someone who's healthy, it doesn't have any, he didn't go through surgery, because when you walk yourself to a financial institution, you are 55 and you went through some kind of disease, you were hospitalized, diagnosed with this and that, they're going to tell you right away, we can't insure you. You're too risky. It is really risky for you to get insurance. But you can have an investment. You can invest, You can put some, how do you call it? You can have some annuities, that is kind of an investment, like people you put money on, and then your kids, your grandkids, it doesn't matter who you put as a beneficiary, can receive after. So it still goes case by case. Don't get discouraged because you're 50 or 50 plus and say, you know what, I don't want to try it because I'm going to get declined anyway. No. We have some institution that can still insure people who are old, like 50 around and plus. Even people who were kind of diagnosed with those critical illness, right? So it's not for everybody. It's not like and because I cannot just come here talk about this institution, I'm just in between. That's why I don't mention like names. But yes, we can work around, shop around, and find a real policy for a senior, and it can still be covered anyway, and the kids can receive something as well. Hope that helps.
And how do they manage that in order to avoid spending that or wasting that? What is the best option for them to manage what they receive from the policy of the grandparents or the parents?
Okay, for them to manage that, the best advice is not just to take this money and put it in the, your daily basis, how do you call those card, like, your debit, and start spending the money, because you're gonna just waste everything. Or don't just go crazy about buying stuff. And remember, I showed you those pillars that we're working on, and help you even to avoid debt. So for you, in order for you, you have to put the money and make the money work for you. It is that simple. That's something that it's not our culture, We take money back home, people, they just hide it under the pillow, right? They say, okay, I take 100, I spend it and come back, take another 100. But here the system's different. In order for them to receive something, even to leave something behind them, make that money work for you. Put the money in investment. We're gonna create a portfolio for you that you can yourself. It's not somebody's gonna just call you, hey, you have your portfolio, and checking on that on daily basis, how it goes, how it grows, So, and we like our mission, our job description is just to work with those kind of people, to help them, to lead them, to refer them. And I work as a counselor, and that's something that we don't do, but it's really important for us to also teach immigrants, to teach people that are coming here looking for better life, how to manage this money. So they have to invest, have to make their money work for them. And we have tons of, of ways to do that.
Like I was saying, I have a friend at school that he died when she was really young. And she has an older sister, and her sister graduated last year from high school.
Mm-hmm.
And then to pay for her college fees, and she wanted to do a grade 12 like traveling to pay for that and her school fees for university. Her dad had a account where he put money in where he separated for his kids.
Mm-hmm.
So that's what she uses to pay for her travel fees and to pay for her school at the moment.
Okay.
So I just wanted to say that was like an example of like how life insurance, leaving it for your kids, can benefit them
Yeah.
in the long run.
Yeah, that's a good example. But if I were this girl, I wouldn't even touch the money yet. I could advise her other way to do it. She could still take the student loan, even though she had some money left. It's easier for her to pay that loan than to lose like the big chunk that the dad left, right? It's gonna finish really, and she has better chance to have student loan, even though she had some money, saved somehow. She had a great chance to still have student loans and paid like big, because those student loans don't really have high interest, right? And maybe use the money for something else, a first house, though other things, other investment. But it's still great, even though she's still, using it that way. But I could advise her differently. You see, so that's why like the purpose is really to educate people and to break this cycle of ignorance, I can say, when it comes to money, how to manage money.
So she could have used that as a collateral, right?
Yes. Yeah, you have another question, Julia?
Yes. I want to know like how does like the life insurance correlate to the will, like your last will? Like if I do one, do I need to do the other, or do I need to do both, or like how would you like define it and differentiate both of them?
That's a good question, because we have some financial institutions that give you the package. It's really interesting because we are also not used to those kind of way to work. But this financial institution give you, when you have the life insurance with them, you have an advantage to have a will for free. Because when you go to the lawyer right now, I think you might pay 100 or 200 something for you to get a will. And every time you want to modify it, you have to pay, extra money. But that will is free. And you allowed to change it, modify it as much as possible. Also in that, you have another opportunity to have I think it's an online doctor, something like that, in order instead of going sitting at the emergency, which is not really emergency because you can die there waiting for 5 hours, but you can have access to a doctor. Hey, hi doctor, I'm having these symptoms, my kid is having these symptoms, what can I do, online? And the doctor will just advise you something and you out of there instead of waiting online. So we have those. It's not something that's separate, that you sign for life insurance and you don't go find another thing. No, we put everything together. And on top of that, there is another, the same package came with the funeral cost. So beside the life insurance, there is a cost that they will give you. I think based on how much you put there, it might be around 30,000 for just a funeral. So you have this kind of policy, you are set. You don't have to worry about the will. You don't have to worry about if something happened to you when you die. You don't have to worry about something when you have little kids to run to the emergency. So it's like everything is set together. And I don't think anyone can just, walk through and say, I need this. And it's impossible for them to give you that. And that's why I say we're just helping, we are just a bridge between this. And those are also kind of another project you can put on place. We have a lot of aspects, we have a lot of options based on the reviews, based on what people need, based on what you hear in the community, you can set up another meeting with somebody else to talk about will, to talk about, some other details. But yes, you can put them together. You don't have to separate them, and you manage it yourself. Okay, Joy, I think you wrote a lot of questions. Go ahead.
It's like, so does life insurance work wherever you are? Let's say maybe like my dad, he goes to another country and there he dies there instead. Would it still be able to work if he's in a different country? Or even if, like, let's say my parents and me have now different nationalities when I'm older, I moved out, maybe I go somewhere else in a different country, and maybe he dies here in Canada, would I still be able to receive his life insurance if I have a different nationality, different country?
Correct. Absolutely. As long as you're the beneficiary, absolutely, you can still receive it. But there are some other policies that won't, you can. Okay, when you go through the process of having life insurance, we have like a lot of questions they ask, okay, about your health, about your family story, about the country you visit, about the activity you do, kind of sports. Because if your lifestyle is really dangerous, you might not be accepted in the first place, So we start with all of this, like, when you travel, which country, you can say like, I usually go travel, okay, which country is in danger right now? Okay, let's say Congo, because there is a war there. They will actually literally say it's risky for you to go there because you might be killed. They are financial, they just want to keep their money as long as possible, so they don't want to take a risk. But yes, if you travel, yes, if you go to United States or Europe or those safest country, you are there, of course, your policy is still up, your policy is still available, your policy is still valid, and your beneficiary as well. But they have to just be in touch, because they have to be joinable if something happened. Okay, the financial institution may be able to reach to the beneficiary so that they can, get in touch and go through the process of,
Ce genre de service, quelle compagnie l'offre et puis à quel coût, comment on calcule les coûts?
Ok, non, c'est gratuit. C'est gratuit si vous voulez. Sorry Nancy, sorry other people who don't speak French. C'est gratuit.
C'est gratuit. Je te suggère de prendre son numéro et peut-être de le contacter après le meeting pour
absolument.
Oui. Vous pouvez prendre mon numéro, Ken, et mon email adresse, j'ai mis dans le groupe chat. C'est gratuit. Donc, si je m'assois avec vous et que je vous oriente, ce que vous aurez à payer, vous allez le payer dans votre policy, dans le portfolio que vous allez ouvrir avec une institution précise, selon ce que nous allons trouver de mieux pour vous. C'est là que vous allez payer votre argent. Vous ne devez rien à moi ou à Hervé, à qui que ce soit. C'est vraiment, c'est gratuit.
Moi, ce que comment dire, je me demande, non, ça va être parfait après. Non, je vais juste souligner que j'ai jamais été en Afghanistan ni dans des pays dangereux.
Ok, oui. Si vous n'avez jamais été là-bas ou si vous ne comptez pas y aller dans les premières années, je pense que la question c'est toujours dans les premières ou deux premières années, si vous n'allez pas voyager dans ce genre de pays, ou si vous pratiquez des sports dangereux, ou si vous avez toujours des pensées suicidaires, parce que ça fait aussi partie des choses là. Donc il y a un certain moment, votre police reste là, mais ils doivent observer certaines choses. Parce que si vous tombez dans la catégorie que vous avez dit non et qu'après ça s'est passé, alors là, vous ne pouvez rien avoir. Donc, ils ont mis aussi certaines limites, mais dans tous les cas, vous êtes sincère, vous dites, moi, j'ai jamais été malade ou j'ai contacté ça et ça et ça. Ils sauront quoi faire pour essayez de vous ajuster selon votre situation et trouver un meilleur profil, un meilleur policy qui répond à vos besoins.
Non, je pense que la santé est saine et puis tout va bien.
Oh, ça c'est merveilleux. Ça c'est merveilleux. Oui, c'est merveilleux. Et puis, like, even though for the people who just, like want to buy a house, you might just go, I just saw you on one of my slides, they were buying a house without having life insurance. And you saw the cost, how much you were paying, how much it was risky even for them to lose everything if something happened to them, like both of them, Mais avec l'assurance vie, they could pay off the mortgage and still have something left behind for the kids, right? So the life insurance is really the key. It is really important. So stop thinking death every time someone mentions life insurance.
By saying that, sorry.
Go ahead.
Yeah, by saying that if you have a floating rate for your house, can they refinance with a lower? Can you find a better rate? Est-ce que
l'on peut meilleur taux?
C'est-à-dire, on a un taux variable et que l'on voudrait aller chercher un taux plus...
Exactement. Et dans l'exemple que j'ai montré aussi, vous avez vu qu'ils avaient un taux d'intérêt, I don't know if I can still find it. Le taux d'intérêt était différent. Le taux d'intérêt était différent avant, mais ils se disent, OK, nous, on veut changer, on veut avoir un meilleur taux d'intérêt. Oui, c'est possible. C'est possible qu'on puisse vraiment aller voir, aller chercher pour trouver quelque chose qui est à leur convenience. Voilà. Donc, ils étaient là. Leur taux d'intérêt, c'était à 3,75%. Leur line of credit. Mais regardez ici. Bon, c'est vrai que ça, c'est le taux d'intérêt. Le taux d'intérêt actuel est élevé parce que l'inflation est réelle en ce moment. Mais on peut toujours trouver, parce que moi, on a renouvelé notre mortgage, je pense, en cette année. Le taux d'intérêt est toujours élevé, mais on a pu trouver un meilleur taux d'intérêt par rapport à ce que the previous lender was, it was giving us. We were around 6 point something, 5-ish, but we could find 4.80 with somebody else.
Excellent.
Right? Yeah. So it's still low. You might see like, okay, yeah, there is no much difference. On like $400,000, it's huge. It's really big money. So sure. There is a way, even though you sign up for like another lender or where the interest is higher, you can still renew it and find something less and be able to save some money. Feel free, to shoot me a message or an email. I might be able to like find a time, book an appointment with you, sit with you based on your need.